I quit truck driving to trade spy. Today I made $210 without touching the steering wheel. At my last job, I was making $320 a day, but my dispatch supervisor violated me, and so I quit. Instead of going back to finding another trucking job, I decided to just stick to this trading thing for a little bit. In this video, I'm going to show you exactly what I was thinking during the trade as I was trading it, because in real time, the future is unknowable. I don't know what's going to happen, but I had to make the very best decision that I could make at the moment that I could make it. And so I'm going to share all of that with you, that you can see my account size, the trade that I took, the time that I entered, and the time that I exited. It took me 2 minutes to make this kind of money. This doesn't happen all the time, but when it does, I'm very, very happy because I'm in and out of the market. Now, I did stop out early. I wish that I stayed in the trade a little bit longer, but the future is unknowable. I had to make the very best decision that I could. And if you think that trading is gambling, click off of this video because this isn't for you. Now, I don't want to give you the illusion that you could do it too if you're not experienced. I've been trading options for well over 3 years and driving trucks, CDL Class A, well over a decade. And trading is very, very risky. You can lose all of your money viciously. So don't do what I do. Don't try this at home. As you can see, I'm scrolling around on the Thinkorswim app to show you this is real. I have nothing to hide. This is my account under my own name. This is not a screenshot. I'm not faking anything. There is $2,800 in the account and $210 in profit today. June 23rd, 2025. If you're a CDL driver and you want help learning this, you can book me for a 6 to 8 week ride along. You choose the length. It's just like when you had a trucking trainer, except this time I'm riding shotgun in your trading journey. I'll help you build a real thesis, structure your trades, and manage your risk. But I only work with people who are serious. You need to have some money set aside. You need to believe in the market, and you need to be ready. If that's you, book a call, or you could just join the Truckers Who Trade community. Link is in the description. It's a hot day. I decided to sit outside in my backyard and enjoy the heat. And it's way better than being behind the wheel in an all beaten down truck with no air conditioning. I'd rather be in the heat because I want to be, not because I'm forced to be. That's the benefit of leaving the trucking industry. Symbol SPY, that's the S&P 500. Okay, so over the weekend, the US attacked Iran. And so my last assumption was that the market was going to basically not like that news and sell off. In the right corner, you can see the daily chart, upper right corner daily chart. Okay, so this dashed green line is from May 19th, and that's a key level, support or resistance, depending if the price is above or below. Now, while I'm doing this analysis, we're live. I already traded, and I'm about to go over that trade, basically. On this daily chart, you see this dashed line. Last Friday, price closed below it, and so this was presumed to be a ceiling. And with the negative news, I anticipated that price was going to fall, continue to sell off, but that's not what happened, right? The market's a very tricky place. Instead, the market opened, pretended to sell off, and then ripped back in the opposite direction. This is the daily chart. Now, I scalp off the 1 minute chart. So with the area that's highlighted gray, that's after hours. So as you can see, when the futures market opened Sunday evening at 6 p.m. last night, the market tanked. It gapped down. But then by the 9:30 Eastern Standard Time open, the market basically recovered. So real quick, it gapped down, it rose up to this level, fell back down, and by market open, which is right here now, it opened close to this level of resistance and immediately sell off. So all of these shorts over here, they got trapped. And then, so this is where I was thinking. Because initially I'm like, okay, we're going to continue to sell off. But then at 9:45, there was this news, that was coming out. I think PMI manufacturing, and I had to wait for that. And I saw this base right here, right on the level, right on May 19th, that high. And so once that information came out, the algos started to basically buy up shares. And I saw this breakout right here. Now, I trade absolute strength, right? And as defined, absolute strength is 5 to 7 candles, staircasing in one direction, price above the 3 EMA, and the 3 EMA above the 9 EMA. So on what you're seeing, this yellow line right here, that's the 3 EMA, this is the 9 EMA, and the blue line is the 20 EMA. The white line is the 50 SMA. And so once this base, you see how price is moving sideways? It means it's not going anywhere. The market was just basically waiting for that news to come out. Once it came out, it broke out above the highs right here. And then I started to count the candles. I entered in my position right around here once this green candle started to overtake the highs of that red candle. So when price is in absolute strength moving in one direction, right? The purple line that you see here, the 9 EMA, that is, I consider that a trampoline, because if it's confirmed as absolute strength, you will see price will serve that 9 EMA. It'll always bounce off of it. And then the 20 EMA is the last line of defense. If it breaks that, it's look out below, because that's where we're going. And so in this area right here, once I saw this started to bounce and I saw all of this staircasing action in one direction and one direction only, while price was respecting the 3 EMA and continuing to go, and then it broke the 3, but then it bounced off the 9 and it went up, and this was another bounce. I'm like, you know what? Let's go long. Bought some options, calls, and I rode it all the way up. Actually, I got stopped out on this candle. I was out by 10. Let me show you. You see, this is my actual, I'm in drawdown, by the way. This is my actual time of entry. I bought 5 contracts. I entered in at 9:58 and I closed at 10 in the morning. Like 2 minutes it took to make, $210 for the day. My average daily goal is supposed to be $320. I didn't quite make that today. Let me interrupt real quick to remind you that trading is very risky. Do not quit your trucking job if you are not financially stable. I'm an experienced options trader. I understand totally the risk that I'm taking on. In trucking, an experienced driver reaches that status after a year or two, not after watching a YouTube video. Set your brakes, set your expectations. If you need help accelerating your learning, though, you can book me for a 6 to 8 week ride along. Link in the description. Granted, I could have re-entered on this trampoline bounce right here, but I chose not to. I gotta pace myself because this is only Monday. I've got Tuesday, Wednesday, Thursday, and Friday to basically ramp up and catch up. But at least I, padded my P&L this time. But ultimately, just to recap, U.S. attacked Iran. There was a lot of people who thought, including myself, who thought price was going to just sell off. The market was going to sell off. Because this is negative news. Could this be World War III? Who knows, right? So there are people who were hedging their positions, buying puts, and people who were straight up shorting the market. And they all got trapped in this V-shaped recovery right here. And I waited. I didn't overreact. I just waited for everything to settle down. And once I saw this base forming right here, I knew this base would inform me very well, because if it broke down, I would definitely bought a bunch of puts. And then if it broke below this, the lowest low of the day as well, I would have bought more puts. But anyways, so this base came in. And then, of course, this is absolute strength. Price is staircasing in one direction only. It's using the 9 EMA as a trampoline. Every time price came back and tested it, it bounced up, came back, bounced up, came back, bounced up, came back. Or it punched through, but then the 20 EMA caught it this time and it went up. But the 3 EMA, this is what's so special to me about the 3 EMA, why I use the 3 EMA. It's the lowest valued moving average that you can use, in my opinion, that hugs price tight enough, but not so much that it's the same level as price. So there's some divergences that happen. And when price action is very, very strong, you can see the distance that price starts to run away from the 3, which is crazy. So that's why it's so strong to me as a signal, because if price is surfing the 3, this is absolute strength. Look at this. You see, when it's moving diagonal like this, that's institutions just like they turned on an algo and they're just buying it. I really wish I was a part of this. Like, I got stopped out right here because I moved my stop up higher and higher and higher, because I wasn't sure if this was like I don't want to say it's a blow off top, but like this wick right here always scares me. I don't really like when price does this. That signals to me that this upside down hammer, whatever it's called, when I see that, I try to move my stop as high as possible to get out. I think I got out like somewhere over here. I didn't get out down here. I got up near up there. So yeah, once I saw that, got stopped out, turned my profits, but price kept going on without me. Do I care? No. I know this is a long game. There'll be plenty of opportunities to catch bigger moves. And then over here, well, initially, my initial thought would have been to catch the 9 EMA, but I'd wait for price to start to approach the highs after bouncing off the 9. but price didn't do that. It started to catch up to the highs after bouncing off the 20. And this would be a good entry up here, this level right here. Once it starts to approach the highs of this level. And then the stop would be, of course, the 20. So that means if you entered right here and then price, instead of continuing to go up, it just puked down, you would stop out right here because the trampoline wouldn't have held. It would have been a trap. But what happened, as you can see, I would have entered right here, but I didn't though. And I would have waited. And then, but here's the other thing too. I have mental shot clocks, right? So if I wait too long, I'm like, I don't like it. I get out. But waited long enough, this would have been another nice little $200-300 run. Now, what's the market looking like? Look at it. And again, the market is live right now, so there's no faking the funk. This is, oh, so I got to talk about my drawdown. So initially, this is my public facing account. So like I started out with like $1,100 in that account. Then I went into a drawdown, with Tesla. Elon Musk and Donald Trump started arguing, and I took a hit on Tesla. So that put me in drawdown. Now I gotta work my way out of it. I added an additional $2,000 to the account because I want to keep it around like $3,000, and so that's where I'm at. It's like 2,800. So I gotta work my way out of drawdown to bring it to like $33,100. Then I'll be out of drawdown, and then we'll see where we go from here. Now that the market's open, it's open. Let's see. You see this right here? This is now, it's in negative territory, but it's not in negative strength because this is a bear flag. So that's the pole. I mean, not a bear flag, a bull flag. This is the pole of the flag. And this wedge, it creates this triangle that creates the flag. Now the expectation is that price can break up. If price breaks up above this high right here, go long. I'm not gonna trade anymore today. I'm gonna wait till tomorrow. But if price breaks below, that's why I'm not gonna enter. But if price breaks below this, under heavy volume, you take the short. But it would break right here. There's this level right here to contend with, and then the highs of this area, that would be the targets. So anyways, that's all the analysis I got for right now. If you need help with your trading, I offer a 6 to 8 week ride-along program. The concept is just like when you started in trucking, where you had a trainer ride shotgun with you over the road to teach you the ways of the road. Well, I do that, but for trading. It's 6 to 8 weeks. You decide how long, you decide the length. I'm very picky with who I choose to work with, but you can go down to the link in the description, book a call with me, we'll have a conversation, and we'll take it from there. I also host the Truckers Who Trade community, so if you're a CDL Class A driver and you're interested in learning trading at your own pace, along the sides of other truckers who are interested in trading, that's where to go.